Welcome to the Daily Business and Finance Show. Tesla takes a tumble, Deutsche Bank downgrades amid Model 2 delays, Iran's threat to Israel's nuclear sites, Nike nears megadeal with Caitlin Clark, Intel installs ASML's cutting-edge EUV machine in Oregon, Blackstone beats Q1 expectations despite rising expenses, Disney and WBD race against time for NBA deal closure, Netflix navigates growth despite dipping shares, and Blackstone announces 83-cent variable dividend. Stay tuned after this short ad break to delve deeper into these headlines. Deutsche Bank has revised Tesla's rating from buy to hold. This decision is based on anticipated delays in the launch of Model 2 and a strategic pivot towards the robotaxi business. Emmanuel Rossner, an analyst, cautions that this could result in a hiatus of new consumer vehicles for several years, which would affect both volume and pricing. Furthermore, Deutsche Bank has reduced its price target for Tesla shares from $189 to $123 due to decreased expectations for delivery, revenue, and earnings per share.
Iran has issued a threat to attack Israeli nuclear facilities if they themselves are attacked, marking a significant rise in tensions within the Middle East. This situation could potentially cause Brent oil prices to surge up to $190 per barrel, and West Texas Intermediate oil could reach $180 in the second quarter. This warning comes from an analyst at Bank of America. In related news, there was an increase in crude inventory by 2.7 million barrels just last week.
Reports suggest that Nike is on the verge of finalizing an endorsement contract, worth 8 figures, with basketball sensation Caitlin Clark. This deal also encompasses a signature shoe. This development comes in the wake of their successful partnership with WNBA athlete Sabrina Ionescu. Concurrently, Nike is experiencing a surge in momentum following a prominent product unveiling event in Paris, featuring the 41st iteration of its Pegasus running shoes.
Intel has pioneered the creation of the first high numerical aperture extreme ultraviolet lithography system. This breakthrough promises unparalleled precision and scalability in chip production. The innovation is a product of an extended partnership with the Dutch firm ASML, and it bolsters Intel's capacity to develop sophisticated processors for AI technologies. Even though ASML's recent bookings have not met expectations, this advancement places Intel at the forefront of next-generation processor manufacturing.
Blackstone experienced a 3.4% drop in its stock value, even though the first quarter earnings were robust. The sectors of private equity infrastructure and multi-asset investing showed good performance. On the downside, there was a significant surge in expenses due to a 78% rise in compensation and benefit costs. Blackstone reported undrawn capital amounting to $191.2 billion and total assets under management worth $1.6 trillion, which is slightly more than what was predicted earlier. Even though the distributable earnings per share of 98 cents surpassed consensus, it marked a decrease from the previous quarter's figure of $1.11.
Disney, along with Warner Bros. Discovery, may not finalize a potential NBA deal before the exclusivity window concludes on April 22. This situation could pave the way for other media powerhouses such as Amazon, Apple, Google's YouTube, Comcast's NBC Universal, Peacock and Netflix to seize opportunities. The NBA has set its sights on doubling its previous deal from 2014, which was worth $24 billion. In parallel to this development, Disney, Warner and Fox are in the process of creating an all-encompassing sports streaming platform that is scheduled for launch in the upcoming fall season.
Netflix has outperformed in its first quarter earnings, showing a year-on-year growth of 16%. This resulted in an addition of 9.33 million global subscribers, which is significantly higher than the forecasted 4.84 million. The revenue saw an increase of 15%, reaching $9.37 billion, and the operating income surged by 54% to $2.63 billion. Due to these impressive figures, Netflix has decided to raise its full-year operating margin target from 24% to a solid 25%. However, it's worth noting that starting next year, Netflix will no longer be reporting quarterly membership numbers.
The Blackstone Group has declared a quarterly dividend of 83 cents for each share. This is a reduction from its prior dividend of 94 cents. Shareholders who are registered by April 29 will receive this dividend on May 6. Even though Blackstone shares are trading at high multiples, the company still holds a buy rating. Reports suggest that it is close to acquiring L'Occitane.
And that's a wrap on the Daily Business and Finance Show. Keep investing in your knowledge. We'll be back tomorrow with more insights. Stay savvy, stay successful. I'm Montgomery Jones.
And I'm Amalia Dupre. Farewell until tomorrow. Have a good one wherever you are.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.